This is Money Talks.
Hi, my name is Ibukun Oyedeji, President CFA Society Nigeria. Join me and a host of other financial industry practitioners for Money Talks with CFA Society Nigeria.
Money Talks with CFA Society Nigeria. Let's talk.
Hello everyone and welcome to Money Talks. Money Talks is a financial literacy program and is brought to you by CFA Society Nigeria. Smart Uzechi is my name. You can call me Captain Smart. Today on the show, Fehintola Adesoyin is my guest. Fehintola has over a decade of experience in financial services spanning banking, financial advisory, capital market, project finance, principal investment, and investment management. She currently leads the capital market and advisory team in one of the investment banking firms. Fehintola has a BSc in mathematics and an MSc in mathematics finance. She's a member of the Association of Chartered Certified Accountants, ACCA, a CFA charter holder, and also a member of CFA Society Nigeria, where she volunteers in the Diversity, Equity, and Inclusion Committee as the Vice Chair. So let's make welcome Fehintola Adesoyin to the studio. Is this Adesoyin or Adesoyin?
Adesoyin.
Adesoyin, so I was correct initially. So Fehintola, good evening to you and welcome to the program.
Thank you.
Yeah. These mathematics people, they're always very serious. They're always thinking, they're always calculating figures in their head. So we're going to have a conversation this evening with Fehintola on investing in stocks, what you must know. So are you interested in investing in stocks, or you already have stocks? You're thinking, these people investing and buying stocks, what are they doing? How can I be a part of it? How can I benefit? Fehintola is here and she will bring the expert advice. So once again, investing in stocks, what you must know, is our subject of discussion on the program this evening. Let's move quickly to it, and just to let you know that you can call the telephone number 0700 923 923 923. That's the number to call me, 0700 923 923 923. You can also call 0818 444 0923. That's 0818 444 0923, or send us a message on WhatsApp 0817 313 6193. If you have questions or perhaps contributions to make, you're welcome to do that, and I'm very sure that Fehintola will be able to provide the answers to your questions. So Fehintola, let's get to it exactly. When they say stock, what exactly is a stock? Because somebody can think is a good in the market or a commodity in the open market. So when people say stock, what is a stock, and do you have different kinds of stocks out there?
Okay, thank you. Good evening, everyone, and thank you for having me here today. Stock is a share that reflects the ownership in a private company. What does that mean? It shows that you own a stake, or you're part owners of a company, and it means that you get to enjoy the return, which is the benefit, and you also get to bear the risk of owning a part of the company. There are different types of stocks. Because we are on the radio and our listeners are quite diverse, we're going to be speaking about just two major common stocks that are quite popular. We have the ordinary shares, which some people call the common stock, and we also have the preferred shares. The ordinary shares are the ones that we find regularly available, usually, and I'm just going to put a disclaimer before I move forward that most of what we're going to be talking about with shares are going to be for listed companies. Private companies that are not listed also have shares, but most of the discussion, the advisory, are focused on listed companies. So
Okay, maybe for the benefit of the listening audience, like you said, the audience is diverse.
Yes.
So when you say listed companies, you need to shed a bit more light on that, so we carry everybody along.
Okay, so listed companies are companies that are listed on the stock exchange.
That's fine.
In Nigeria, we have the Nigerian Group Exchange, which is also the Nigerian Exchange Limited. For all the stock you see there, they are on an exchange and they are called listed. The benefit of that is that there's price discovery every day. Anyone can just go to Google and just put in NGX, and then you get to the website and you can see the price it's been traded. The website has it delayed by 20 minutes, but you see the price movement. So that helps for price discovery. And for a company to be listed on an exchange, there are some regulatory oversight or regulatory criteria that they need to adhere to. So they are also called public companies that are listed. It's possible for a public company not to be listed, right? You could be a public company and you're not listed on an exchange. However, what that means is that your shares are not available to the public. Because you're not on an exchange that I can easily get to as a basic investor. We also have another exchange in Nigeria, which is the NASD, right? We call it NASD OTC because they reflect the price. However, it's more of an over-the-counter trading that happens. On Nigerian Stock Exchange, you don't know who is buying your shares, but on NASD, you have the opportunity to know whoever is purchasing it. Right. So those are the key exchange that we have. I'm sure we still have some as time goes on, but for equity and listed company, NGX, will be the go-to.
So let's now have the types of stocks. So for this type of stocks, we have what we call the ordinary shares, and we have what we call the preferred shares. The ordinary shares are the people that we call the shareholders. They participate in voting. The rights of the shareholders their rights are plain, usually contained in what we call their memat, and what they can do and how the decisions are being made by the management team of the organization on their behalf. The shareholders, they get dividend. However, for preferred stock, it's a bit dynamic. Why do I say that? A preferred stock means that even where ordinary shareholders don't get dividend payment, there's a pre-agreed dividend payment based on the agreement. So if I were to hold a preferred stock of say ABCD PLC company, I would probably have in my agreement that I want to receive a particular amount of dividend every year, and they would agree. Usually where there's something we call where there's trouble in the organization and people tend to lose their investment, right, the preferred shareholders could rank ahead of the ordinary shareholders. So for the context of this discussion, the ordinary share will be what we'll be focusing on, because that's what is tradable on the exchange and the NGX right now, and that's what most of this discussion will be tilted towards. All right, in case you're just joining us now, it's Money Talks. Money Talks is brought to you by CFA Society Nigeria, and it's a financial literacy program. My guest on the program this evening, Fehintola, is discussing investing in stocks, what you must know. She just told you there the different kinds of stocks you have out there and what stocks are exactly. So, Fehintola, then what do you need to consider? Because when you say investing in stocks, I'm sure you're talking about people buying stocks out there. You've already told us what stocks are. So in investing in stocks, what do I need to consider? Do I need to know anything specifically, or there's a school of stocks that I need to attend to know what to do before I venture into that?
Yeah, so there are professionals that's what they do, right? We call them stockbrokers, portfolio managers. However, at the basic knowledge level, first things first, I wouldn't say they rank from the most importance to the least, but it's good to have an objective of why you want to invest in stock. Are your objective long term or short term? Investing in stock is usually best for a long term objective. What do I mean by long term objective? 18 months and above, because stock in the short term are quite volatile, right? You could invest, and if you're planning to exit in 3 months, the market could have swayed in a different direction. So if your objective is the short term, then you have to be like a real professional, right? We call them traders. They are stock traders, and that's what they do. They focus on technical analysis. Then another thing, I think it's important, you need to understand the company you want to invest in. You need to understand what are their products and services. You need to understand how do they make money. Doesn't necessarily means that you have to be able to do all the financial analysis. But for example, say you want to invest in an insurance company and you don't even know how they make their money. You don't know what they do. So you probably just think they collect money and it sits idle. But if you understand that, when they collect money, they have to actively invest it. And what it means is that when the economy is booming, then more people are most likely going to take on insurance because they're probably investing in assets, buildings, infrastructure, aviation, and because of that, they need to do insurance. Also, you need to understand the impact of regulation on the companies. So entities or businesses that are well regulated, they tend to be stable, unlike businesses that are not regulated. So if your risk appetite or your risk tolerance level is very low, then you want to play in industries that are well regulated, right? I mean, a very well regulated industry that we're all familiar with in Nigeria is the banking sector. It does not mean it's the only sector, but it just means that it's a sector that is well regulated, and because of the regulation, they have to do periodic reporting. They have to ensure that they have proper corporate governance. Those are key assessment that helps to protect your investments. Another thing you want to look at is competition. Okay, are they positioned in their industry?
Hello.
I'm sorry.
Hello.
Hello, good evening. Please, am I? Yeah.
Yes, good evening. It's Money Talks on. Yes, I can hear you.
Yes. Please, I have a question.
Can you tell us your name and where you're calling from?
Okay. My name is Stella. I'm calling from Ilupeju.
Welcome.
Yes, thank you very much. Please, I want to ask Ms. Fehintola, how do you know if you invest in a company, how can you be sure that the dividend you get is approximate to the investment you're making and the money they're making in the company? Because at the end of the year, a company could tell you that, they didn't make so much profit and they could pay you less than they are meant to pay you. So how can you be able to check to make sure, to ensure that, you're getting something, you're getting more, or you're getting what you are expected or what you are meant to get when you invest in companies like this or buy shares?
Thank you very much for calling. We appreciate you. Okay, maybe you just wrap up your thoughts and then you can answer the question.
Okay, I probably lost the thought already, so I think I'll just answer the question.
Yeah.
So, firstly, for you to know how the invested company is doing, there's something that we call the annual reports. They will always release their audited financials every year. For all companies listed on the NGX, they report quarterly reports, which means that you get to see all their numbers and their performance on a quarterly basis. And that, of course, the audited account is released yearly. If you're familiar with the income statement, then you see the performance, you see their earnings per share, and of course, you can tell. However, a business or a company is not expected to pay out all their profit in form of dividends. So it's possible for a company to earn, to report an income or profit, say 10 naira per share, and decide to pay dividend of 2 naira per share. This is usually as a result of some other things or businesses that the business has to take care of. It's the same thing for us as individuals, right? When we have our salary or our savings, we don't give everything away. We tend to keep some of it for future purpose, right? Maybe you want to invest say you want to buy a house in the next 10 years, you could decide to keep part of your salary or part of your income to save towards that. So in businesses also, they are at liberty, right, based on the approval or based on the forecast and the plans, not to pay out all of their profits. But for you to know the performance, you just need to be able to check the audited financials. And of course, dividend paid will always be announced. So there's something called earnings season, right? For businesses that their year end at December, earnings season starts in Q1, the following year. And you will see on various platforms online where they will be announcing dividend that has been paid. If your dividend is short, withholding tax 10% is applicable on your dividend. So if you hear that dividend payment is 2 naira, you're not going to get the full 2 naira, right? Yes, there's a tax. Yes, there's a tax implication of 10% on your dividend payment. So once you just do that, you just want to make sure that what you're getting reflects what has been announced.
All right. Okay. You can send a message as well to 0817-313-6193. That's on WhatsApp, or just call 0700 923 923 923, or you can call 0817, or you can call 0818 444 0923. So Fehintola, you talked about when you invest in these stocks, you have to know when to get out. But before you get out, the stock may have swayed. I heard you say that. Okay, let's take another call. Hello, good afternoon.
Good afternoon.
Thank you so much for calling. Your name or where you calling from?
I'm Samuel from Paloma.
Welcome, Samuel.
So you talked about listed companies. So what should I look out for in these listed companies to know the best option? Because I will be spoiled for choices to invest in.
Did you hear that? Can you say that again, Sam?
I mean, you talked about listed companies that are listed online, where if you want to invest or buy shares. So what should I look out for when I go online and see these companies, just so I make the right option?
Okay. All right. Thank you very much for calling. What to look out for. But I was asking you if there are particular times. I think it's kind of like tallies. Are there particular times that are better than other times when you talk about investing in these stocks? Maybe you can join the both of them together.
Okay, so I try not to advise people that there are specific time because it could be a trap, right? Whilst you're waiting for a specific time and the market does not align. However, it's a kind of systematic market. There are times whereby the market can be bearish. What does that mean? When the market is bearish, it means that most of the stock prices are trading at their lowest level. Could be as a result of the general economy of the country, or it could be as a result of dividend payment. So what happens sometimes is when a company declares dividend and the dividend date is passed, right, the price adjusts based on demand and supply. So for example, let's use myself as a case study. I had invested in say a GT stock, and GT had declared a dividend of say 2 naira 50 kobo, and the dividend registered date, say for example, was April 28th. I could wait for April 28th. Once it's after April 28th, I could decide to exit my stock, because by then I would have been entitled to dividend payment. What that means is that for someone else buying my stock, they know they're not going to get in the dividend payment. So the price adjusts to reflect that. However, like I mentioned before, your objective is very important. If your objective is to hold your stock for a long-term purpose, then you do not need to be tracking it in such a way that you're looking for a specific time. You want to focus on getting fundamental stock, and of course speak to your stockbroker on if this is a good time or if this is a good price based on their knowledge. So for our caller that requested for what to look out, part of what we had said is that you want to understand the business. This company you want to invest in, how do they make money? If you understand that, then you are able to understand if you align with their business objective, or if the risk level is something you're willing to take on. For example, right, if you look at the oil and gas industry and the banking industry, they are two different industries. The oil and gas industry is more specialized than the banking industry. The implication is that laymen like myself will probably don't really understand so much about the oil and gas industry. However, we understand the banking industry. And then the banking industry is heavily regulated, and there are a lot of information about the banking industry. But for the oil and gas industry, you need to be able to understand, is it operating in the downstream, in the oil stream, is it oil servicing, or is it procurement? You need to understand which parts of that industry they are operating in. And of course, you also need to understand the impact of corporate governance on a business. So the thing with corporate governance is that corporate governance is long-term focused. Corporate governance speaks about the board of directors and the management team that manages this company. And where you have corporate governance that are good, solid, there's a high chance that the business will survive a longer period of time. There's succession plan, they are clear in their objectives, and people are holding each other accountable. So I would say it's good for corporate governance. It's good to check out for regulatory impact, business model, what they are doing, your objective. Is this for the long haul or for the short term?
All right. There are messages coming in here, and we're running out of time. This person says, good evening. How can one know when companies are ready to sell shares, and what is the authentic process to buying shares so as to avoid being duped? So very quickly, Fehintola, if you can answer this in 30 seconds.
Okay, so companies that are listed on NGX, they are always available. There are always shares available for sale. If you want to invest in them, I would recommend that you speak to a SEC registered stockbroker. You can just Google SEC, that's Security and Exchange Commission, on Google, and you go to their website, you see a list of stockbrokers there that are licensed, right? Then also, when shares are going to be available for sales, investment bankers like myself will be having a lot of public notice, adverts, right, to say these shares are available for sale and you are able to participate, especially for public listed company that has been cleared by the SEC.
Okay, so in investing in stocks, investing via mutual fund or directly, is it better?
Okay, so it depends on your risk level and your knowledge level.
Yeah.
If you are not very savvy with your finances, I recommend investing through an equity mutual fund. The benefits include you can invest with as low as 10,000 naira. You have access to experts. There are people that they are dedicated to deciding on the type of investment they do. Then it gives you opportunity for diversification, because in a mutual fund, the portfolio is able to invest across different types of stocks, and that helps to improve your risk level. For a savvy investor that is very comfortable with what they are doing and has decided that they want to get exposure to a particular stock, then you have to go directly to say, okay, I want to invest in a particular stock.
How do you manage risks, and what strategies should you take as a shareholder to mitigate potential losses? This is another message coming in here. Very quickly, 30 seconds.
As a potential shareholders, I think you need to be active. So you need to attend AGMs. That helps you to get a sense of what the company is doing. You need to read on your annual report, not just look at the audited financials, read the notes to the account. That gives you insight about what is happening, right? Disclosures. And then you need to also follow up on corporate disclosures by the business, which are usually being uploaded on the NGX website. Then I think I would not want to elaborate this point. Corporate governance is very key.
Yeah.
Very, very key. And then you want to see consistent growth trend in the stock. So a business or a company that is not reflecting consistent growth or is not reflecting the trend, as much as its competitor, then you want to start taking a second look. So if the industry is growing at say 4% and the business you're invested in is not growing, then I think there's something wrong.
All right. 0818-444-0923. You can call that number or send a message to 0817-313-6193. Anna from Akoka says, should we only focus on dividend payment on dividend paying stocks? Some stocks don't pay dividend but seem to move in prices. So where do we focus? 30 seconds.
Okay, so I think that if your risk level, firstly, so for people that their risk tolerance level is low, they should focus on dividend paying stock, because that way they are sure of particular cash flow coming into their account. But for people that are a bit savvy and they have the risk tolerance level, they could mix it up, right? Invest in stocks that capital gain they appreciate. However, I believe that if you want to take a position, even if it's just for the purpose of capital gain plans, you want to invest in a company that is profitable, right? And that way you can enjoy the capital gain. Historically, Nigerian markets like stock that pay dividend, and they tend to move. So usually in the Nigerian market, the stocks that pay dividends appreciate in price faster.
So is investment in stocks risk-free? Yes or no?
No, it's not.
So there are risks?
Yes, the applicable risk.
Really? Can you mention two of them very quickly?
So, like I said, the price could go down. You could invest in a stock at 9 naira per share, and then in another 3 months is 5 naira per share.
And your 4 naira Otilo.
Yes, Otilo. If you exit, right? If you sell.
But if you wait there.
And
pray.
Well, you don't have to pray. You just you really just have to check. So the thing is that when the share price goes down, you need to check why.
Okay.
So you look at the accounts, you look at the books. The business could tell you, it's because of FX risks, or they could tell you, they are planning some capital project, and they expect that their performance will improve in another 12 months. If you believe in the dream, in the strategy they've presented, you should hold.
Okay, friends, so very quickly, like 10 seconds. If Kasala Boss, Yawa Gas, and there's a problem, who protects the ordinary investor when there are issues with this broker you mentioned, the professional, or even bigger shareholders, or even the company itself when there's a problem? 10 seconds.
Okay, so when there's a problem, depends on the type of problem. However, all listed entities, that's all listed companies, capital market operators, stock brokers, are all regulated by the SEC, Security Exchange and Commission. So when you have issues with your stockbroker, your registrar, and your company as a minority shareholder,
can petition them there.
So SEC, they have office in Lagos and Abuja. They are the go-to.
All right. Thank you so much to discuss here. Somebody is sending a message that says, is there any form of insurance on your stocks in case of company liquidation or a firm going out of business? Fehintola is doing like this, so
no.
I wish you can see us here. And we're out of time. Fehintola Adesoyin, thank you very much for coming. We've been talking about investing in stocks, what you must know, and I'm sure you have known a lot tonight. So thank you very much, Fehintola, for coming. We appreciate you and hoping they bring you back anytime soon.
Thank you for having me.
Yeah, that's our program. Join us again next time. Till that time, be wise when you're investing in stocks. Have a good evening.
Thank you for joining us on this episode of Money Talks, hosted by the CFA Society Nigeria. Stay connected with us on Instagram, Facebook, LinkedIn, X, and YouTube at CFA Society Nigeria. Follow us for more financial insight and updates. Keep a date with us next time.